welcome back. You're watching Stock Picks. Today we look into some of the top players in the athleisure sector, focusing on Adidas, Nike and Lululemon. Independent analyst Jimmy Moyaha weighs in this afternoon. Jimmy, hi, how are you?
Good, thanks. How are you, Nolu? Thanks.
Good. I see you got surprised when I said it was called Athleisure. You don't think that you're going to have a fancy name for leggings, but there are. Thank you so much for being here with us this afternoon. Jim, maybe before we get into the stocks, do you have a favorite athleisure brand?
No, not really. Whatever's comfortable, I suppose, works. From an investment point of view, there's been a lot that's happened across all the stocks we're going to be taking a look at. So I don't know if I have a favorite. I'm leaning towards one in particular, but we'll unpack them and see how we go.
Let's start with, I think, the most popular one in the world. It has to be Nike. Nike is the most popular brand in the world?
Yes, it is.
It is, yes. Let's start off with Nike.
Nike is the most popular brand in the world. Second to that, not too far behind, is the Adidas brand. Obviously, one US-based, one Germany-based. They are kind of very similar, if not identical, in terms of brand and offering and what they bring to the market, and they kind of operate in a lot of the same sort of markets. And if we start with Nike, I think this is, for me, there's quite a few things that are happening here. We've got earnings out on Thursday, firstly. That's always a big telltale sign. And interestingly enough, with Nike earnings, they are typically the sign that US earnings season is kind of coming to a close and wrapping up. So we usually open with the banks. We kind of close off with the Nikes. And it's a very interesting barometer, or a very interesting stock when it comes to being able to showcase the appetite of US consumers in terms of spend. Yes, all of these brands have got an international presence and international appeal, but from a Nike perspective, their biggest market does remain North America. Their second biggest market, if I'm not mistaken, would be in Europe as well. So they do have a lot of their home base exactly where they've been operating, or where they've been headquartered for the longest time. And for me, the stock has a couple of things that are happening at the moment. And one of the things that's happening is the announcement that we got yesterday of that class action suit. Now, that's a very interesting thing, because anytime you see a class action, you need to have an understanding of the fact that there's more than one party involved here. There's a law firm that's brought this up, and they've opened up to say, we'll assess everybody who's traded Nike stocks between March of 2021 and March of 2024. If you've made losses, this is what we're going after Nike for. We'll do an assessment of your own individual circumstance and see if we can add you to the class action. So they're trying to get the class action to be even bigger. It's a very interesting thing to go after a giant like Nike at this time, and with this type of lawsuit. That being said, it doesn't necessarily make other companies immune from the same sort of thing. I mean, if you look at the law firm in particular that's going after Nike at the moment, they have a history of getting, I think it's north of $5.5 billion back to investors in these kinds of class action suits that they've done in the past for other companies. So it'll be interesting to see how that plays out. What I'd be really interested to see is how the Nike management team in the earnings call on Thursday responds to these developments, because that's going to give us an indication of how they feel about the suit. We'll see things around whether there's a discussion around a provision, whether there's a discussion around fighting the legal battle. So any indication around how Nike intends to respond to this class action suit is the first thing I'm going to be watching for from that perspective.
Also very interesting, because of course that American market is highly litigious, and of course this is one that could actually go very far. Jimmy, I also want to speak about just Nike. I think when I was doing my reading on it, what becomes very clear here is the fact that Nike is big, but it might be lagging in terms of innovation and what people want to see from it. I recently saw the Nike Cortez return. Of course, and this often happens with these brands. They bring back an oldie and a goldie, and it comes back to the market. But there are some analysts who are saying that this could be a bit of laziness emerging from the group. They're just not innovating the way they could.
That's interesting, because if you look at some of the consumer surveys that were done, both in the case of Nike and Adidas, you look at where customers are how customers are responding to that, and you'll see that in the case of innovation, Nike still ranks as one of the most innovative brands when compared to the other two that we'll be looking at. But also just in general, yes, there have been inclinations from their Chinese market, especially, that they are lacking in innovation, and that's where you're seeing that they have now taken a bit of a back foot. They're no longer leading that market as they were before, or the gap is kind of narrowing in that space. So from an innovation perspective, that is going to always be front of mind for consumers. But at the same time, from an investment point of view, you kind of want to be looking at other factors as well. It's one thing to innovate. How does that innovation translate into your balance sheet and your bottom line is a completely separate thing, right? So when you go and innovate and you introduce a new product, if sales don't take off, it costs you a lot of money. It costs you a lot of development to put in terms of resource and capital expenditure. If you think about the other brand and what happened with the famous musician who we shall not discuss, that's a clear indication of the fact that one kind of product can be a difference maker to your balance sheet. And it can be a meaningful difference maker depending on how it swings and depending on what you're doing. So innovation, always good, always lovely, always welcome from these sorts of brands, and always needed to stay at the forefront of the industry. I mean, especially if you've been leading the industry for so long. I mean, you look at the likes of Lululemon, who we're now bringing into this conversation, but let's be clear, by legacy standards, it's not,
they don't match.
They haven't been around that long. You know what I mean? So it's one thing to be innovating, but it's another thing to be consistent, to be timeless, to remain in the market as long as you've remained in the market, despite what has been happening in the market.
Speaking about legacy, let's speak about Adidas, because I think this is also, this is my favorite based on just the apparel alone. But they've been very deliberate, I think, in how they've marketed themselves. First of all, we are seeing a huge Samba Gazelle boom. That tells me that, they've managed to bring back those oldies and make them goldies again, which I think is fantastic. But what's obviously very interesting about Nike is pop culture. And that being what they've used, I guess, to differentiate themselves. When Nike has kind of kept in a bit of a sporting, theme going, Adidas looked around and they're still selling Yeezy apparel. In fact, they've had to write down lots of impairments with Yeezy merchandise, but they're still selling it. Let's talk about that.
Yeah, so if you look at just I think for me what's most interesting about the Adidas Nike comparison and what's happening there is China. Believe it or not, the Chinese market for both companies represents 15% of each company's total revenue. For Adidas, it is the third largest market that they have after the US and Europe, and it is the one market where they are now leading Nike in terms of innovation, according to the consumer surveys, in terms of just response that's happening within the Chinese market. That being said, Nike is not a brand you can count out, because their CEOs come out to very clearly notice that they're lagging behind Adidas in that market, and they've said we will double down if we have to regain our market. So they are actively and openly competing for that market, and it's quite an interesting market because a lot of the consumption that happens from that perspective kind of happens in different sort of pockets, right? So if you think about, they are Chinese brands, and I think one of the Chinese brands is Luling.
Yes.
They're a Chinese brand, very big in China, very domesticated, but they rank third behind these two brands. So even a local brand falls behind when it comes to how big these two brands are. And when we look at what's happening on the Adidas side as well, they're also not immune to controversy. They're currently investigating probes of bribery allegations in the said Chinese market as well. There was a whistleblower case that's come up now in the last month, in the month of June. It was reported, I think, around the 7th of June. And now you're seeing that they're saying, okay, we're going to investigate this because a lot of executives and high-ranking senior officials have been mentioned and from the Chinese Adidas brand, and so they're investigating this. They obviously want the brand reputation to be kept intact and all of that. So there's a class action on the one side, there's bribery on the other side. Neither company is immune to the normal dramas that we experience in the world. That being said, both companies kind of have their own interested parties. If you look at asset managers in the US have been picking up a lot of Adidas shares, increasing their stakes. One of the asset managers, I think the asset manager is Fisher Asset Management. They increased their stake by 27% in that respect. But at the same time, companies like Lululemon as well, they've got asset managers increasing their stake north of 500% as well. So there is a lot of interest in this space. And you're starting to see that from an asset management point of view, but we typically know that asset managers get in at a certain time, and the athleisure space, as you refer to it, it's a very cyclical business. Like if you look at how consumers engage with these brands, they're not top of mind.
Yeah.
It's not priority. I mean, basic things are priority, services, things like your groceries and your Tesco's, your Targets, those kinds of brands where you go for your everyday needs, those will always be top of mind at a time like this. And your leisure almost kind of, takes a bit of a back foot. Do we really need that? Do I really need an extra pair? It does tend to have a bit of a slowdown effect. And to that end, I mean, if you look at Lululemon, and we'll get into that in a second, around the fact that their revenue forecast or their earnings forecasts have been revised down following the latest set of earnings numbers that have come through. So these kinds of brands have that longevity to be staying through the market through various cycles. But in cycles or in times where markets are kind of prioritizing other things, one almost forgets that, these brands are still out there. These brands are still producing things.
I completely agree with you there. I want to speak then about Lululemon and how it enters into the fore. It's less recognizable. One would even think that if you aren't, into athleisure too much, you might not even know that it exists. Unlike a brand like Nike or Adidas, where, for instance, my mom doesn't really care for fancy sneakers, but she knows the brand kind of exists out there. Where does Lululemon fall into the greater scheme of things, Jimmy?
I think it's one of those new emerging brands, right? So new emerging, it's got its own little popularity, its own little niche that they've sort of carved out. I remember when they initially started, there was a lot of focus or there was a lot of branding and imaging around staying fit and yoga and exercising from home during the pandemic and using Lululemon apparel and attire to do that and the comfort that brings you and all of that. But the reality is, when you are a Lululemon and you're stepping into the wheel, the stable, or you're stepping into the ring with an Adidas and a Nike, it's very easy to get knocked out. Very easy to get knocked out to the point where you don't come back. So credit to Lululemon for having stayed the course and having been able to still gain some market share of their own. From their perspective, they announced quite interestingly that they feel that their shares are undervalued, and they announced this by approving a $1 billion buyback program. Now, that's only going to allow them to buy back up to 2.5% of their stock. But nonetheless, this is typically what we see when companies come into a market or companies are trading at a certain price and they're like, you know what, we feel our stock is undervalued. I mean, yesterday I had a conversation with Stephen Joffe of Invicta Holdings, and they bought back almost 90 million rand of their stock because they felt it's undervalued. So this is what companies do at the point where the share price isn't responding to what you are doing as a company, or not responding the way you'd think, and you as a management team believe that you can unlock more value and that the share price is trading at a discount. You start to buy back because you're buying back at a really affordable price. And credit to Lululemon again for having stuck it out, having reported, I said they reported earnings, I think it was around the start of June. I stand corrected, it might have been the first week of June, 5th of June or so. And from that perspective, we kind of got an indication of where they are. And subsequent to that, we've seen asset managers come out and say, we're going to revise our forecasts on this. I mean, Citigroup revised their price target from $500 to around $415. That's a 17% revision down. A lot of the bigger banks have revised the stocks down. Obviously, guys like Barclays have a completely different price target in mind. The share price is trading at around $322 odd per share there. So you're seeing that it's each asset manager or each institutional investor kind of has a different view on each of the three brands that we've been looking at, and they are trading it. There are brands picking up the stock. There are brands letting go of the stock at any point in time, and I think it's more around the exposure side of it. So if you look at something like Lululemon, recently adjusted from an underweight brand to potentially being overweight in some cases, and this is something that we saw happen with SA Inc. as well around the announcement of the government element of national unity and all the hype around that. So investors are certainly looking, and institutional investors are certainly looking at everything at the moment, and the athleisure space is not immune to that.
Very interesting, Jimmy, and I want to speak then about for the retail investor at home entering any of these counters, because also the Summer Olympics are now. Right? And I'm wondering, is this something that could be seen as a boom for some of these? Might they make people feel a little bit more sporty? And could we see benefit for these kinds of stocks based on an event like this?
Well, absolutely, but I also don't think it's isolated to one event. So, I mean, if you think about just the sports world in general, right? You think about the fact that we've just come out of, a couple of weeks ago, we've come out of Roland Garros, the French tennis tournament. We are now heading into the middle of the year, which means we're heading into Wimbledon season. Tickets for Wimbledon are up in the... So you're going to see these brands exhibit their products and their innovation and their finest pieces at these sporting events. And that's kind of what they use the events for, is to inspire you and I as consumers to go and buy the product because, oh, look, I saw it here, or I might have seen it in store. And the sporting events kind of have an added advantage that I don't have to go to a store to see what a Nike is rolling out, or what color schemes they're going with, or what sort of styles that they're going with. I mean, one of the big brand ambassadors, so to speak, of the Nike brand at a stage was Tiger Woods. Every time when something would come up, or he would wear something to a major golf tournament, people would be like, oh, okay, that's where we are now. So these sporting events help brands like Nike and Adidas keep up with, or keep their clients informed of what they're doing, where their innovation sits. It'll be interesting to see how companies like Lululemon, that are fairly new to this space, start to involve themselves in these sorts of events. So I'm certainly sure that the Olympics coming up would be a good place to showcase the quality of what they have and what they bring to the table, but also a really unique opportunity to showcase any innovation where customers might be saying, we want to see something new.
Very interesting. I love clothing on LeBron James. If he wears something, I want to buy it. I want to buy it for people I love. Let's talk about you ranking these 1, 2, 3 for retail investors. In what order would you go in on them?
Couple of reasons, perhaps. Let me go into the rationale behind the ranking, right? Is when you're dealing with an Adidas versus Nike, you've kind of got a one-for-one, same brand sort of thing. So you almost don't, if you're going with one, you don't really go with the other. They kind of sit as opposites on a choice wheel of sorts. And for that reason, I'm going to put Nike first. They're trading at a much better discount. They're trading at around $90 a share, and I think Adidas was around 220 euros a share. Adidas is entering or eating a bit of the market share from Nike, and that is concerning Nike. But the fact that they are concerned about it means they're willing to do something about it. And you've got that difference in share price and value. If you look at the performance and you look at the numbers, over a 5-year period, you've kind of had consistent balance sheet numbers, consistent revenue numbers from both brands. Nike's revenue numbers have done quite well. I'll look forward to see again what comes out on Thursday and how they respond to a couple of things. So Nike sits first, Lululemon sits second on the basis that they are a newer brand, a fresher brand. There's a bit of appetite where it comes to consumers. Consumers like the new thing, yes, right? There's always that element of, oh, we can always go back to an Adidas, we can always go back to a Nike. Let's try something new. There are some consumers that are hell-bent on consistency. I will never deviate from my brand loyalty, that sort of thing. Now, it's going to take a while for the likes of Lululemon to establish the level of brand loyalty that Nike and Adidas have. And that's kind of why they're not too concerned about new players and new entrants. That's what they've built for their customers and for their clients. So, ranking system, Nike first, Lululemon second, and Adidas third.
Wonderful, Jimmy. Let's do luxury vehicles next.
Sure.
Awesome. That was independent analyst Jimmy Moyaha.